You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means it's time to rock out once again with the option block, everyone's favorite bi-weekly source for all things options related. What do we do here? Talk unusual activity. We talk some educational stuff, aka strategery, talk a whole bunch of what's trading, do some odd block, do a bunch of your questions, look ahead into the future, all sorts of fun stuff. That's what the option block is. You guys can get it every Monday and Thursday, noon Central, 1 p.m. Eastern if you like the live version. Otherwise, you can get it on demand on your device of choice, pretty much however you like. What did that listener ask us last week? Do you have an iTunes? Yes, we have an iTunes. We were there from the early days, the primordial ooze. We were the first ever options podcast, and it's just been growing ever since. Back when you had pre-iTunes, back when you had to have an RSS reader to get the stuff, we were there. So yes, we've been there for quite some time. Check it out. You can always get our app as well that has all that goodness baked in and a whole bunch more. And speaking of a bunch more, there's a bunch more than just me on this program. We'll see who we got. Let's spin the old all-star roulette wheel, who we land on first. Let's go out to, we don't know where he is actually. He could be in Riverside, Illinois. He could be down the street from me here in Chicago, or he could be in the beans aisle of a Costco near you. Let's find out. Mr. Greasy Meatball, Mark Sebastian from OptionPit.com. How you doing, sir? Where are you beaming at us from today?
I am with you live from downtown Chicago. So it's a great day here. Nice and cold, nice and wonderful. So what a great day.
Chilly, but still like 30 to 50 degrees warmer than it was a few weeks ago, right? So it's all relative in that sense. Speaking of relatives, he's not my relative, but he is somewhere in the distance out there in the hinterlands of Chicago, where we are joined by none other than Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome to the show, sir. I assume you're beaming to us from St. Charles. Maybe you're beaming to us from a Skippy's, Gyros, and Lemonade, sir. Where are you?
I'm not going to tell where I'm at. I like keeping things a secret and keeping things a mystery. I could be in Provo, Utah. I could be in Atlanta, Georgia. I could be in Kissimmee, Florida. I could be in a lot of places right now. But I am right here on the Option Block Radio Network, here to serve our loyal listeners for another exciting hour.
Kissimmee. Oh, well, I'll be in that neck of the woods in a not too distant future. But in the meantime, we got some of the trading block coming at you right now.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the old trading block, the block of trading, where we talk about what the heck is trading today, coming at you a little bit past noon central here, the one true time zone. And we're seeing another kind of a bit of a weird, slight, modest, mixed day. We're seeing the S&P, again, kind of playing the Goldilocks of the day, in the middle of the bunch, up about 0.1%. NASDAQ up a wee bit more, up about 0.25 percentage point. And the Dow deciding to take a break today, saying I'm going to be off about 0.1% to the downside or so. But again, not a lot of rock'em sock'em crazy directional stuff going on today. Kind of a bit more of a feeling itself out, finding yourself type of day for the markets and indeed for volatility. Speaking of volatility, VIX finding itself a little bit more juice today. Ye old VIX cash up not quite half a handle or so, a little bit north of the 16 handle, flirting with 16.20. We had an intraday high in VIX cash. What was it? About 16, not quite 16 half, 16.46. So we were down in the 15 handle before, coming back up. We shall see. I believe my prognostication on vol views was about 17.25, actually a little bit of a tick up from last week, which was, of course, a bullseye if you listen, listeners. So stay tuned to that show. That show, it's got some nuggets in it. But we'll see. We've got a whole week for that prognostication to come to pass. Since we're talking vol prognostications, let's start with the Meatball. Mr. Meatball, sir, first off, how you liking your prognostication? And then B, what's catching your eye, and perhaps more importantly, the eye of your crazies in your pit chat today?
I'll tell you, it is like watching paint dry today. I got to be honest. The market is just really slow. There's not a lot going on. My director of operations, her husband's actually still in the SPX pit, and he's like, this is horrible. So vol seems to really be starting to take it in the chin. You know, the VIX is up a little bit, but really weekend adjusted, you would argue that it's down. And we're heading into a 3-day weekend this weekend with next Monday being a day of honoring presidents. And, you know, it just goes to show you all these Politico people are like, oh, shut down, sell your stocks. Guess what? Stocks don't care about government shutdowns. So when you let your politics play into your trading, that is how you lose money. And case in point today, we're up marginally, and we're almost certain to have we're 50-50, maybe 70-30 to have another shutdown.
Yeah, we got another shutdown looming on horizon, you know, all sorts of fun going on with our friends in Russia, threatening an additional trade war with Europe. You know, the Chinese one, not really the done deal people thought it was. And yet the market's, who cares? Who gives a crap? Let's go out in the SPX pit and just pin some provocative images on the back of the guy in front of you. That's what those are the days like today are for out there. And all sorts of quality jokes, which we shall not repeat here. Family-friendly type show. All right, instead, let's move on to a land that's very family-friendly, St. Charles. Uncle Mike, Mr. Meatball said it's like watching paint dry. Easy for me to say. Do you concur? And in this day of paint drying, what, if anything, is catching your eye, sir?
In this day of paint drying, no, not a lot catching my eye right now. We have some just kind of waiting for something to happen, and typically when we're waiting for something to happen, it usually takes longer than you think it's going to happen. You never know what's going to happen, and when it happens, a lot of times it happens more drastically than you originally thought it was going to happen in the first place, whether it's for better or for worse. So really not a lot lighting up my tape right now. It's kind of like if you're watching a football game and a team runs a dive every play, you get bored to death with it, and the defense just thinks they're going to run a dive the next play, and then before you know it, they throw the ball deep and they burn you. So be careful, folks.
Don't even get me started on football. We had a flag football this game this weekend, and the other team maybe thought it was tackle football. All sorts of fun out there on the football front. But I digress. Let's move on into other more fun topics, shall we? Including what is lighting it up in this day of paint drying. Let's see. Things are trading, despite what you may have heard, even though not a ton hitting the old tape. Let's check in with our most actives on the day. Let's start with the equity options land. Number 10 from the bottom, AMD, about 86,000. Number 9, Micron, 93,000. Number 8, Nvidia, good old Nvidia, popping off after the bell. In a few days, we'll get to them a little bit, 96K on the tape. Number 7, Facebook, 101,000. Number 6, Snap, good old Snap, $1.12 on the tape. Number 5, Twitter, about 119,000. Number 4, good old Tesla, $1.20. Number 3, EA, the gaming sector, in some spotlights, perhaps not for the best over the past week, $1.25 on the tape there. Number 2, GE, continuing to be at or near the top of the tapes a lot these days in the options world. Number 2, $1.52. And number 1, good old Apple, dominating the tape yet again, with 176,000 contracts on the tape today, about 60% to the call, so a little bit more call bias than we see out there in Apple land. Typically, Apple off about 30 odd cents today, right around the 170 level though. So again, the 150 level, perhaps a distant memory for the near future, at least. Those things could change quite a bit. Of course, coming into showtime, looking at the indices, like we mentioned, it was kind of a bit of a quiet one. About 250,000 contracts on the VIX tape coming into showtime. ADV out there, well shy of 500,000 now, about 476,000. SPY, not even at 1 million contracts, 902,000 coming into showtime. ADV, they're shy of 3 million, about 2.75 million. SPX, about 381,000 contracts on the tape. That's where Mark said his associate there was watching paint dry, about $1.25 in terms of millions, $1.25 million in terms of ADV out there, and rounding out the indices, the Qs, about $1.64 on the tape, 773,000 contracts out there in the ADV land. There are still some earnings on the docket for this week. We'll give you some interesting ones. If you're into the realm of the cannabis, the C, the first C, the other C being crypto, of course. But if you're into the first C out there of cannabis land, I know our buddy Short Vol Show, Mr. Lincoln, I think he likes some TLRY. They're not reporting this week, but we are seeing some other big names in that sector, including Aurora Cannabis, ticker symbol ACB, and Cannabis Growth, ticker symbol CGC. Aurora's on Monday, and Cannabis Growth is on Thursday. So if you kind of had to break down what the top things are for earnings this week. Got a little cannabis, some soda in terms of PepsiCo. They're popping off on Friday. And you got some game earnings if you didn't get enough last week. And it was kind of a bit of a blood red sea out there in gaming. But they did make some of that back later in subsequent sessions. So this week, if you didn't get enough of that, we also have a good old Activision Blizzard, ticker symbol ATVI. They're popping off on Tuesday. Remember, that one used to be kind of like Microsoft. It used to be one of the more reliable premium rights in the business. Let's see how we're looking right now in Activision land, off about 2 3/4, almost $3, or a little over 6%, 40 and about 3/4 or so out there. So not quite the staid name it once was out there, and we have seen a lot of volatility in the gaming space of late. Let's just look over the past week. Yeah, this name has felt the heat as other names have taken it on the chin. It sold off from about 48, pushing it down to about 43 pretty quickly on Tuesday and Wednesday in the wake of some bad earnings of some others like EA and Take-Two. And then, of course, PepsiCo. If you're interested in PepsiCo, by the way, our buddy Mr. Overby there on the Options Playbook Radio put together a very interesting skip strike butterfly trade right around Pepsi earnings. If you're intrigued by that trade, intrigued by trading Pepsi options, or maybe you just want to go and check out some ways to trade flies around earnings time, that's an interesting one to check out. It's only about 15 minutes. You can easily do it and listen to it and get some interesting ideas going forward. So there are some names popping off after the bell later this week. Let's see here. If you want to check out the earnings moves, what do we have here? There's a few still popping up on the website, the results. Not a ton going on out there in terms of names. A lot of the big names have reported, but you can find a bunch of those still over on the old website there, theoptionsinsider.com. Just search for Aurora. It's ORATS. And you'll find the move reports, the move results reports, and everything else going on under the sun out there. A lot to keep you busy over there. About 20 or so headlines a day, a dozen or so, if not more, articles a day, analysis, most actives, all that fun stuff. All hitting the website all day long. So if you're bored, you want to check out some options content, theoptionsinsider.com is the place to go, as well as, of course, the radio. And don't worry, I know I've been talking about it for a while. I've been promising it for a while. It's coming. It's taking a little bit longer than we thought, as is always the case. With anything home repair related, anything contract work, anything website design related, it takes longer than you think. But there should be a brand spanking new theoptionsinsider.com coming to you fairly soon, we hope. Fingers crossed. So I know I've been saying that for a while. It's supposed to come earlier already this year. So hopefully we'll see it soon, get some cool stuff out there, make the shows nice front and center for you guys, get those really easy. All sorts of other fun stuff coming at you there. Stay tuned to that. Meanwhile, Mr. Meatball, let's hit on this before we roll on into the odd block. You were talking earlier about shutdowns. Nobody cares about government shutdowns, right? We just came off the heels of our last one. It was the longest in history, a little over 3 weeks or so. And we saw a different, again, I guess it kind of depends on what political stripes you wear, but they saw 3 different analyses of how much that shutdown actually cost. And it's kind of interesting to see how people value such things. S&P, typically what you think might be, the standard bearer for corporate valuations, typically trying to be, you'd think, politically neutral, just looking at the cost of it. They determined the government shutdown cost about $5 billion. The border wall amount they wanted was $5 billion. They said the shutdown cost about $6 billion. They looked at it in terms of lost productivity from furloughed workers, weaker economic activity. It was 35 days, by the way, the shutdown. So they assume all of that worked into their metrics of about $6 billion. Then we get to the Congressional Budget Office there, CBO, they said the $5 billion wall cost the economy about $11 billion. Again, they're looking at net impact to the economy, which is always a bit of a hazy analysis because there's a lot of fudge factor you can put in that. And then we get the CRFB. This is the Committee for Responsible Federal Budget. Sounds like it may be a politically motivated think tank to me. I'm not familiar with them. They said it's $26 billion. So they determined it was 4 times more than what pretty much S&P thought. So interesting stuff out there. I guess, again, it kind of depends on what type of political stripes you have on maybe which analysis you believe. But in any analysis, the fight over $5 billion costs us a lot more than $5 billion. So hopefully we'll keep that in mind as we potentially head towards another shutdown. Meanwhile, though, we're just heading on into our next segment here. It's time to dive on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we get odd, we get weird, we get wild. Let's kick things off, Mr. Meatball here. You were mentioning before the show. Our Eye of Sauron, by the way, listeners, always scanning, always watching. We found some interesting ones, but I know it came across your tape, and it's pretty sizable, Mr. Meatball. So we kind of saw it there as well. But let's kick things off there with your old friend, your favorite, XOP, the Spider S&P Gas Explore and Production ETF, trading today 2870 out there. This is the name that has vacillated over the past year. A year ago, they were about 33 and a quarter, so about 5 handles north of where they are right now. They got as high throughout the years, close to 45 back in early October. We all know what happened in the middle of October. They sold off pretty hard. Christmas Eve, getting down to that. The nadir for everything, Christmas Eve, pretty much 24 and change, and now they're trading about 4 handles north of that, 2870. But Mr. Meatball, some size paper lighting it up. I know this came across your tape too as well. What caught your eye out there in XOP today, sir? I
mean, take a look at all the March volume. There is, call it 200,000 contracts trading in March in XOP, and this is not, it's active, but it's not like that kind of active. The ADV for the average volume is about 167, and they've already done 205,000 in calls today on what is a really, really, really slow day. The stock volume is running below average, while the option volume is already at about, call it 1.5x. So looks like a customer was dumping some losers and rolling down to see if he can find a winner. I was looking at the 34 calls. The 34 calls were sold about 105,000 times. And prior to that, there's no huge option purchase. But what there is we go through a period starting on, first trade was on March 23rd, but the majority of it was January 30th, 31st, Feb 1st, and Feb 4th. And Feb 5th, customers buying calls in XOP as it was really selling off. So it looked like some averaging down, and then the guy kind of said fat. Kind of some similar paper on the 33s, 24,000 of those. Same thing. Guy builds up position from the fifth through the first through the sixth. Looks like he dumped it today, and then opened the 32 calls. So looks like he just reset his delta by selling, call it 130,000, 33 and 34 calls to buy 65,000 of the 32s. Also, a little bit of volume on the 30s. I think those seem a little more reasonable. By my eye, the cheapest option on the board is the 31s, though. That is where, if I was going to step in and buy anything, that is hands down, relative to the strikes around it, the cheapest on the board.
That's the sweet spot, huh? The 31s, that's the Goldilocks option out there. 31s.
Well, on a volatility basis, yes. Not on a probability of winning, but on a what's the cheapest option to own if I wanted to own anything, it'd be those 31s.
You heard it here first. Mark Sebastian says the 31's the highest probability of winning out there right now. Cannot miss. 31 calls. Get them while the getting is good. Also looks like some put paper hitting the paper today, about 100,000 contracts.
Yeah, oh yeah.
The March-June 27 put spread 50,000 times. Crushing the bid kind of on both, so one of those funky. But again, you do that much size, you can kind of get away with the executions are kind of meaningless. I don't think he did his put stupid.
I think it's a close. I think it's a close.
Really?
Yeah, because if you look at the open interest, there's 50,000 open interest in June and 50,000 open interest in March. So this might be somebody that had kind of a bearish position on that decided to unwind it, like maybe a bear calendar, and you're within a point. Let me take a look at when this was opened. Yeah, Mark, we saw a pretty decent-sized block trade. 50,000 of these traded on January 14th, when XOP was 30.42. And if we go to June, I'm going to see if the date's the same, and then we'll know it was a spread. It looks like no. It might. You know what? I'm wrong. Because the June was opened. It's a close and roll, is what it is.
Sometimes I have to let you work to these. Sometimes I have to let you work to these conclusions on your own, sir. But it always ends up. It always ends up. You're in the right camp.
Look at the open interest. It makes sense.
Yes. I can see how you'd come to that conclusion at first, sir. I don't judge. I let you walk through it, and then you come to where I am eventually, which is all that matters at the end of the day. But you're right. This is crazy size paper out here. And listeners, again, you don't have to follow these ones. Mark, like you said, he likes the 31s out there from a vol perspective, cheapest out there. But these massive trades in the skew will set up all sorts of things. So maybe you have a different outlook. Maybe you want to do a straight up vertical instead. That'll cause all sorts of distortions in the skew. Let you get into things for all sorts of fun levels. So even if you're not intrigued by that particular trade, it sets up all sorts of other things that may be indeed interesting to you. And just crazy size out here. Not a name we talk about a lot here, XOP, on the show, which makes it kind of fun to profile here. But again, our eye of Sauron, always scanning, always watching. Kind of not quite the same size, Mr. Meatball, but a similar, that was kind of a call palooza with some, shall we say, some put kickers out there. 100,000, not much. It's a big kicker, but it was pretty sizable printing out there. Not quite the same size, but a bit of a kind of a palooza out here, we like to term it, in everyone's favorite name, CTL. This is Century Link Inc. This name today, right now, trading $14.08 off about 13 cents, or not quite 1% out there. This is the name that over the past year, let's see, got down to a year ago. They were trading 16 3/4, so almost $3 north of where they are right now. They sold off promptly in the maelstrom of February and March down to about 15 and change. And then they gapped up in the August timeframe up to about 24. And then they kind of slowly but erratically made their way back down to their nadir. Guess when it was? Yep, December 24th. You'd be correct. To about 14.5. So pretty much still a little bit north of where they are right now. Then they sprung up again to about 16, and then they sold off again. Pretty much where they are right now, right around 14. So they're definitely at the bottom, at the low end of their 52-week range. And what's lighting it up out there on the options tape? Well, it looks like a bit of a put palooza, like you mentioned before, including what first came across our scanners was a block of 5,500 of the Feb 14.5 puts. Paper kind of lifting the offer on those bad boys for 79 cents. That is opening on a sweep over there on the Philly, but they weren't done there. We also saw paper a few minutes later, about 8 minutes later, coming in, gobbling up. Looks like, well, you don't know, mid-market on these. They were 23 cents at 27. Of the 13 puts, 9,197 times. So it is possible they were potentially legging into a 1x2 there, but doing later. Again, not related paper, did not go up on sweeps, but it's kind of hard to see that kind of size in a name like this and maybe not wonder and head scratch if it was indeed perhaps related. Also, this print went up late, so again, you got to read that execution with a bit of a grain of salt. They're also worth noting they do have earnings coming up in a couple of days on the 13th after the bell. So this is some pre-earnings put paper. Also, they weren't done there. Looks like a little bit later, someone coming in and taking up, looks like about 7,000 of the April 10 puts as well for 18 cents, also opening out there. So it is possible, it looks like on the surface, perhaps a little bit of concern about some near-term downside. These strikes, though, I mean, especially the 10 strike, that's a pretty distant strike. We didn't revisit that over the past year. Let's go out to the max. And it looks like it has never hit the 10, at least in the chart of this chart going back 5 years. It has never threatened the 10 handle. The nadir is about 1384 back in December of 2017. So looks like they have not threatened that, which makes the 10s perhaps an interesting choice. Again, those could be. Now, those probably look like they're buying, but again, that's another weird print. Also, again, the Feb 14 halves, those make more sense. Those are actually in the money. And 13 puts, also a bit of a bridge, interesting bridge far, but not perhaps too far. If you're wondering how the volume breaks down here, usually this is the name that averages about 16,000 contracts a day. Today, doing 42,000. Mr. Meatball, what's your spidey sense, your rock lobster sense telling you on this one? You think this is a little bit of pre-earnings skittishness out here or something else afoot?
My rock lobster sense? What the heck does that mean? How dare you? Who do you think you are?
I knew that would offend you to your core, sir.
Yes. So more importantly, I got to tell you, getting back to being a meatball, I made bison balls last night.
That sounds interesting and or awful. I don't know.
They were, I was surprised. I liked them better than I like turkey meatballs. Same fat content, whole 9 yards. I thought they were way better than turkey.
Are they gamey? Sometimes you wonder if they're going to be kind of gamey.
No. They was real tender.
Oh, tender.
It was the tender bison balls. Cooked in my homemade sauce. It was amazing. Your
bison balls recipes here on the option block.
We're going to get those posted to the site, folks. If you want to learn how to make bison balls, you got to go to optionsinsider.com.
I hear Uncle Mike has a recipe coming up for that later in the block of strategy as well. Should be good.
So, he's got a Buffalo Bills balls recipe.
Don't even get him started, sir. He'll come down there. He'll come down there to your office.
I know he will. All right. So I'm sorry. I forgot what we were discussing.
We were talking activity in some name. It was yes.
CenturyLink Inc. Right. We're looking at CenturyLink Inc. Guy set up kind of. It appears to be. Yeah. I mean, I think. Kind of a weird spread, right? He's got these. Kind of moving this Feb trade and then setting up something in April. And it appears to be, some sort of setup ahead of earnings. The April 10s are interesting. I'm guessing there's some stock hidden there somewhere. That's kind of the only way a trade like this goes up.
Yeah, those 10s are a weird choice. I want to dig into those a little bit more. Those as a sale and as a buy don't really ring. Maybe he wants to finance a little bit of his nearer term puts, meteor puts. I don't know. That's a weird one.
It's a little weird.
I guess might be want to pick up a little more of the 10s. But yeah, those are weird ones. File those in the weird category. Perhaps not quite as weird as bison balls, listeners, but weird nonetheless. You can always count on being derailed with some great culinary tips here on the old option block, listeners. Let's wrap it up here with another name. You come here for the big names, the big products, the names everyone's got on the top tip of their tongues. And when you say that, of course, you have to put Sangamo Therapeutics Inc. in that list, ticker symbol SGMO. That's kind of what I like about the odd block. You get some funky names out there. You don't usually talk about the couple 100,000 blocks of XOP, a little bit notwithstanding today. Sangamo Therapeutics is our resident cheapy biotech here of the day. This one trading about 8.5, so a little rich compared to a lot of our usual biotech offerings. They're $2, $3, $5. This one about 8.5, up about $0.75 or nearly 10%. So it looks like a good day for Sangamo Therapeutics. I'm gonna go out on a limb before I even look at the paper and guess. It's probably calls trading out here, but we'll see. We'll table that and we'll see what it is. Instead, let's look right now at the past year and see what's been going on. A year ago, this thing was trading $20.50. This is the biotech I know and love here. This is the chart of a pure quality biotech. $20.50. A year ago, they spiked up to about 26. That looks like the high, 26 and change back in March of last year. And then pretty much immediately back down to about 16. And then kind of vacillating around the 15 range for the better part of the year. Then got down to 13 towards the end of the summer. And then towards after the October sell-off into November, they were shy of $10 again, 9.5, and they've kind of been trending. Actually, they bumped up to a 12, almost 13 again back a few weeks ago, and now they're right back down again. They got down to 12, and then they sold off hard recently on the 6th. I'm guessing some sort of bad drug news from the FDA. Just go out on a limb and guess that. And let's see, they got down as low as 772 or last week, so it has not been a good couple of weeks here for Sangamo Therapeutics. They do cell and gene therapy to combat hemophilia and other genetic diseases. So guessing they probably maybe missed out on some approvals. Oh, let's see what the paper was. Oh, yes, I was right. How do I know these things? Call paper. It was the Feb 9s lighting it up for 15 cents about 2,000 times, gobbling up that offer. They were offered at 15 cents. This guy said, I will take those. I will take all of them to the tune of 2,058. This is opening paper on the Philly. Worth noting, earnings are included in this. They are, actually, no, they're not. The earnings are the 21st. So this will be pretty much right after these. But also worth noting a total of actually another 1,000 trading. So a total of about 3,000 going up out there. OI is decent, about 1,500. Maybe someone piling on this bad boy. So Mr. Meatball. Oh, by the way, ADV out here is about 5,000 contract, 5,100. So they're doing a pretty decent paper out here just in this one print, Mr. Meatball. So it looks like, stop me if you've heard this one before. Crazy chart and crazy upside going up in a biotech. Have you seen this movie before, sir?
Yeah, well, take a look at the candle from the 7th. Open 1250. Low $6.26, close $8.31.
That's a perfect buy. That
encapsulates
a biotech for you right there. I love it.
When you said Sangamo, at first I thought you said Satchmo, and I was like, so I started thinking to myself about Louis Armstrong and
nope, that was not.
And all the greatness of It's a Wonderful World and how great he was on the trumpet.
I was instead invoking a turbulent biotech, sir.
Well, there you go. Yeah, this looks to be some bullish paper and makes some sense to me. A name that had a $6 candle should see some upside action around the Feb 9s and the Feb 10s. So, yeah, I almost certainly buying.
So there you go, listeners. If you agree with this person, maybe you want to take some nice flyers. Maybe you just want to do some nice verticals. Someone gobbling up all the calls here. Now I'm going to say Sangamo. Meanwhile, let's see what our resident suburbanite / weather shielder / St. Charleser has in store for us with a little bit of the old block of strategery.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, the Meatball kind of laid it out for us. He said it's like watching paint dry out there. These are one of those days where sometimes, what do you do with yourself? It's like an actor. You're on stage. What do I do with my hands? You're a trader. A day like today, what do you do with yourself, sir?
Oh, gosh, I don't know. I think this is a very important thing to talk about because sometimes people fall victim to the curse of overtrading. I remember one time we had a rep in our office, this is about maybe 8 or 9 years ago, to where he had a futures client, and he was a futures broker, and I overheard him just basically, and he was actually very good at what he did. He'd help a lot of clients. They did a lot of great things with him. But what he did is he was very selective on when he would make trades. And so, which is kind of odd for someone who would actually earn his living off of commissions. He wouldn't recommend trades to clients unless he really felt it was a good trade. And he was very honorable and ethical with that, which was a rarity in the business at that time. But with that, there was one client that he had, I'll never forget, he just could not handle not having something at work. And so finally, I remember Rich was his name, the rep. I remember finally just hearing him after overhearing his conversation for like a half hour. He finally was just yelling back at him. He's like, listen, people who live in Vail, Colorado do not go skiing every day. Some do, but the reality of it is that there's no rule that says you have to trade every day, and there's no law that says you have to ski every day just because you live in Vail. If you have a brokerage account, you do not have to trade every day. There are no activity minimums. You're not being punished. You need to be in cash. And so it got pretty heated after a while, and eventually they made up, and they still kept a very long relationship from my understanding. But the point is that if there's not a trade to be made, then don't make a trade. Once again, if there's not a trade to be made, then don't make a trade. With that being said, just because you're bored and you want to just do something, that's a horrible reason to make a trade. And if your indicators aren't there, if you feel the market's not moving for what you need to do, then don't do anything. Now, there is one thing worse than doing something that you normally do on a day you wouldn't normally do it. Okay? And here is what's worse than that. Doing something you wouldn't normally do on a day you wouldn't normally do anything to begin with, just because you think that something's changed. Now, what the heck did I just say? What do I mean by that? Well, on a day like today, markets really aren't moving that much. So the first temptation to maybe someone who is a swing trader or a premium buyer or a stock trader, whatever the case may be, or a futures trader, someone may want to sell some premium when they really usually don't do that. Well, the market's not really going anywhere. Let's just sell these calls for a couple days and take some time decay, or sell these puts for a few days, or sell this spread for a few days, get some time decay. This market's not moving at all. If that's not normally what you do, don't do it just because the market's not moving and allowing you to do what you normally want to do. It is a recipe for disaster. As a trader, I'm a firm believer that trading is more than just numbers. I believe that it is the right mentality, and I also believe that it's a form of self-expression, quite frankly. Me personally, some artists have canvases that they like to paint on. My canvas is my trading screen, quite frankly, or the portfolios that I set up for longer-term clients. And so if I typically am a painter, I'm not going to go out there and start doing some ice sculpting one day, even though I've never done it before, just because the canvas store doesn't have the right size canvas for me and I'm all out of them. By the same token, if you're typically a swing trader and you're not a premium seller typically, don't just sell premium just for something to do. Here's why. Because of the fact that trading is very mental and a form of self-expression, once again, that's my opinion, you don't have the mentality to get out when you need to, when the market goes against you if you're short premium. Or on the flip side, you don't have the mentality to stay in it if it's going your way a little bit if you're a premium seller. It is a different game. Just because of the fact that, let's say that the NFL, if they were to go on strike, football players don't go out and start trying out for baseball. Well, unless you're Michael Jordan, but that's another story. He was a basketball player, of course. But it doesn't work that way. So my message for today is that if you don't feel that your system dictates a trade for the day, then your system doesn't dictate a trade for the day. If you have to wait a week, a month, several months to make another trade, that's fine. You might get a little bit bored, but that's fine, because you'll be just as well off in a month as you were before by being in cash. The benefit is that you will not lose anything. Now, if you want to try new strategies by maybe paper trading them or maybe trading them with an extremely small amount of money and something that you were thinking about trading anyway, and this might be the opportunity for it, great, have at it. But don't abandon your strategies and don't totally change just because of a day like this or a few days like this. And that is my strategy for a Monday.
No, it's good that you said that on this show, because I think this is a particular problem for the audience of a show like this. You know, the uber active retail guy, right? Well, he's uber active. What does that mean? He wants to trade. He needs it. He needs to trade all the time. We don't see a lot of guys who are, you know, pros who kind of cut their teeth on the trading floor, and others. They don't. I don't feel any compulsion on any particular day to go out there. You kind of know if you have a bit of a long-term perspective on this, so there's always going to be another setup, right? It's not if you miss one, there'll be more. You know, so but we don't. Yeah, the active retail side, they need to kind of churn and burn. How many times have we seen it on this show, right? Someone will send us in a trade like, what do you think of this? And we'll look at it, and you could see initially what they were trying to do. They had some strategy, they had some outlook, and then maybe because they were bored, maybe because of some other reasons, they started fussing with it, right? They started tinkering. They added a leg here, and then they adjusted a leg here, and they rolled. The next thing you know, this very straightforward, maybe it was a fly, maybe it was a straight vertical, became a multi 18-leg monstrosity that makes no sense, right? And it's all because they were over trading. So yeah, that's definitely a problem out there. Maybe the brokers don't like to hear that because they like people trading, but the over trading, if they ends up costing them money, is not a good thing. So hopefully Uncle Mike's words will resonate with you listeners out there, that this is a problem. We see that a lot. We just look at our mail block and you could see that. Speaking of our mail block, let's get to a little bit of your questions. It's for a little bit of the old Monday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, it's time to check your mail. Let's kick things off, actually. Let's pay off what we asked you guys last week. Kind of a fun, silly question. We said, hey, and everyone's had football on the brain coming off the big Pats victory over the Rams and kind of a bit of a sleepy Super Bowl. So we thought we'd ask you, well, who do you feel if you had to buy a call on one team just to make it into the big game next year? Not to win necessarily, just to make it in. Gave you 4 choices: Pats, Rams, Bears, and Saints. A couple write-ins for the Chiefs. Not as many as I thought. I thought there'd be some umbrage. Not as many. Guess not a lot of Chiefs fans in our audience. Either way, the Pats taking it 38%. Found number 2 by the Saints. Number 3, the Bears. Our legally obligated Bears, only 8% for the Rams. I guess they're somewhat poor showing there in the Super Bowl, perhaps contributing to that. This week, getting back to basics with some fun stuff. We know you guys have been hitting us up for a while about the poor naming convention, shall we say, of our old friend VXX, now known as VXXB. Not a good name. Hopefully they adjust that soon. But we said, VXX is dead. Long live VXXB. There's a not quite new, somewhat new kid on the block now. Now that the old one's gone, this has been out there for a little while, obviously, but now it's front and center for everybody. So we asked you guys, we've heard some complaints about the spreads and other things out there. Quite simply, are you guys trading this, or are you maybe getting your vol fix using other products? I gave you 4 choices yet again. Yes, I'm jumping right into VXXB. I like it. Or no, the spreads are just too wide, and we can understand that. Or maybe no, you prefer a different product. Again, the no answer is a little bit more nuanced, which is why we had to give you a few choices for that. No, you prefer something else, like a TVIX or maybe an SVXY or something else like that. Or no, you prefer the old mothership VIX options. Again, 3 no's versus 1 yes. So maybe a little swinging, but we'll see. We'll see if the total yeses can outweigh the different shades of no. Again, we're limited in what we can give you. Only 4 choices. @options is the place to go on the old Twitter machine to make your voice heard. Let's see what the Mr. Meatball's voice has to say. Mr. Meatball, do you think people are trading this, yes, or you think they're opting for no? And if no, what are the reasons, sir? Why are they not trading it?
I mean, it's starting to trade, but I think just people are trading it, but it's just, a lot of the open interest from VXX was old stuff. And so when, I think we lost a good group of people that were trading it. So, are the people that were made it through kind of the Volcapocalypse or whatever you want to call it, still trading VXX? Yeah, but are we seeing the same kind of volume? No, because there aren't as many people to have it. And so just a bunch of open interest just kind of died. But I think when we see vol start to really calm down, I think you could see this thing start to pick up. And at some point, next time it really makes a hard move one way or the other, I think you'll see some people that are all over this thing.
I guess we should have added a fifth choice, which is no, because you got wiped out in last year's extended Balmageddon to the upside. we didn't want to drive that one home too much for our listeners who already have felt the pain out there. Uncle Mike, you have any thoughts on this one way or the other?
No, I mean, I agree with Mark on this. It's typically, I think Mark pretty much said it all with this one.
Don't say that, because then we'll never get him to shut up about his Bison balls. Instead, let's see what are. Again, this just went live before Showtime, listeners. You got the rest of the week to chime in over there. But in the early voting here, looks like no, preferring VIX options is taking it with 37%. Number 2, a tie for yes, you liking it, you're jumping into some VXXB, and no, you prefer the TVIX or other ETPs out there. TVIX just the one we put out there. It doesn't have to be TVIX. It could be any VIX ETP, even though there aren't that many left post last February. And, of course, 13%. Only 13%. I thought this would be number 1, but no. Only 13% saying no, the spreads are too wide. So, we saw some news out of the SIBO recently that they're trying to address that. Maybe that's doing its work. The spread's not quite the turnoff that a lot of you guys thought. Yeah, they announced those on February 1st, so a few weeks ago. VXXB options going to be eligible for trading in penny increments. All options series quoted below $3, including leaps, are eligible. That, of course, probably helping address that a little bit. All right, speaking of addressing that, we got JVacx. He wants to know, whatever happened to those Tesla 50 put holders? Did they close out? Did they roll? Are they still slinging those puts? Well, yeah, I think the spoiler alert on those ones is Tesla did not go to 50. So those puts went out worthless. No, they did not roll. Those were still open. It wasn't really, towards the end there, it was kind of hard to catch a size bid for those things. If you paid attention to that saga, maybe we should put something together on our network or on the website, just the saga of those puts. They first came into our attention, they still had a year and change to go. And I think they were trading somewhere around 30 odd cents, maybe a little more. But they were getting a lot of heat, a lot of interest. They were size open. They were the biggest open thing out there, which caught our eye. And then, of course, they had quite the tumult over the subsequent year and change, where they went all the way up to almost 10x, up to about $3. I think the high was somewhere around $2.90. And then they came right back off again the other side. So that just goes to show you don't need a delta to have a big movement out there. The Vega component of these puts is huge. And so, yeah, those puts had quite the saga. We saw people getting into them at that $3 level, which obviously was painful in hindsight. We did see trading throughout the whole time while they were open. But as we said many times, there clearly was another axe to grind against these. It wasn't just straight up, hey, I think it's going to blow out. I think it was more probably hedging against some CDS. So we saw some speculation. There were some funds out there that were also doing it against some exposure in high yield paper on Tesla. Either way, it was kind of a catastrophe hedge. And that seems like that's what they had on. So, and they were getting so much for that paper they were doing that I don't think the premium on these puts really left that much of an impact on them. So, long story short, they didn't work out, but they had quite the saga, and that might not be a bad idea. A little bit of a deep dive into the saga. We talked about them so much, they got picked up. I think Reuters and other places started talking about them. They became the big topic du jour there for a while. Let's look now, though. You asked us, are they still slinging those puts? Did they roll? No, they didn't, but there is paper out there in Tesla on the downside. In fact, if you had asked us when this question came in, with our team crunched the numbers, I'll have to see if that's the same today. It's coming in from a few days back. But they crunched the numbers, and guess what? The top open interest position was, at least at the time this question came in, Mr. Meatball or Mr. Uncle Mike. If you had a guess right now, or at the time of this question anyway, I'll pull up numbers for today too, see if they've changed. But if you had to guess the number one open interest position in Tesla as of the past, let's say, a week or so, what would you guess? Let's go either one, Uncle Mike or Mr. Meatball. Have at it.
I'll say the Jan 2020 50s.
Interesting. Mr. Meatball?
I don't think that's a terrible guess. I'm going to guess the hundreds, not the 50s.
And by the way, for the rest of the show, you're going to be Mr. Bison Ball, just so you know.
Mr. Bison Ball?
Mr. Bison Ball.
The greasy bison ball?
The greasy bison, yes. We're going to get an explicit tag now on iTunes because of you, sir, and our weird meat product jokes here on the show. But you guys are pretty close. You said the pars in Jan. Uncle Mike, you said the 50s in Jan 2020. It's actually the March 50 puts. With at the time of this, about 43,000 were open. That was the number one, followed by number two, the Feb par puts. So close to home. These bad boys. We got to see Tesla take it on the chin the next couple of weeks here. And then number three, the Jan par puts with about 31,000. So both of you were in the top five at least. And number four, the Jan 50 puts, Uncle Mike, with about 31,000. So they're close. The par puts and the 50 puts in Jan were both close to 31,000 each. Then we go down 25,000 for the March par puts. Then it kind of goes down there. But it is pretty much the top 10. Yeah, it's all puts in the top 10. The meatiest of them being number 7, the June 250 puts, 20,000 open to those bad boys. So yeah, you got to go all the way down to number 12 to get the first call on the Tesla list, and it's the Feb 400 with about 14,000 of those bad boys open. That's pretty much almost it, except for, I take it back. The Jan 2020 700 calls also have 12,000, almost 13,000 open to those bad boys. So that might be a good Twitter question. Which one's going to pay off? Has a better chance, the par puts in Jan or the 700 calls in Jan? Which of these outlandish trades do you prefer? Either way, the interesting stuff out there, Mr. What was your name? JVacx. JVacx, yeah. So short answer to your question, they're still slinging those puts. This probably is a lot of the same customers, actually, but they didn't roll specifically from the Jans of this year out to March. They've been kind of building these bad boys up. So, yeah, we're already up to 42,000. So if anyone wondered if that was kind of a one-off thing, if that was kind of just, they just liked a little bit, no, clearly someone has an axe to grind here. They found out a good strategy, whether it's in the high-yield paper, whether it's in the CDSs, kind of two sides of the same coin. Either way, they got something going on that's pretty juicy, and they don't mind spending a little bit of cash to hedge it on the downside. So interesting stuff. Total at the time of this, about 1.5 million contracts outstanding. This kind of looks like a bit of an inverse of VIX here, about 500,000 contracts on the calls and about 1 million contracts open on the puts. That should give you pretty much in aggregate there, listeners, what people are feeling out there in Tesla land. Meanwhile, it's time for us to tell you what we're feeling for the rest of the week. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Really quickly, by the way, I forgot to mention, we did dig up some of the flow history on these puts. This coming courtesy of our friends over there in the land of alerting of trades, a.k.a. Trade Alert. And you can see here that these March 50 puts, which are number one, they kind of done steady paper for a while now, but starting back earlier this year. We saw about 3,500 trading July of last year. That was the only big print, and then 33,000 in September. Other than that, every other big print has been this year. Going back to the 9th, they did about 2,000. So slowly, back in July of last year, they were about 4,000 open. By September, they were up to about 11,000 open. By January, beginning of January this year, they're up to about 18,000, and then they've added on over the last couple of months. By January 24th, at 17th, they were up to 25,000. By the 18th, they were up to 32,000. We saw about almost 10,000 trading on the 18th, and by now, there's up to close to about 40,000+ open on that strike. So they've added up a bunch just in the last month and change, which is another indicator that, hey, guess what? They wanted to replace the puts that they had on that went away in January. So yeah, a lot of interesting flow, still afoot out there in Tesla downside puts. Meanwhile, I talked to you about what we have afoot here for the rest of the week in terms of earnings. Let's just run that down for you again. Today, if you're into the cannabis sector, there's Aurora, Cannabis. Tomorrow, if you're into gaming, Activision, Blizzard. Wednesday, cover your ears, Uncle Mike, it's Cisco. Number 4 is Nvidia. If you wonder what that joke's about, go back a few years on the show. So Thursday, we have Nvidia. This name kind of already pre-announced, but we saw what happened with Apple with the pre-announcing. Maybe that'll work to their favor here. We'll see. Also, Coca-Cola. If you can't get enough soda this week, you got Coke on Thursday, you got Pepsi on Friday. Also got our old friend CME popping off on Thursday, as well as Cannabis, Growth, CGC, and AMAT on Friday. Of course, PepsiCo. Check out that fly that Mr. Brian Overby put on OPR last week. Interesting stuff around Pepsi earnings. Let's go back. Uncle Mike, now that you recovered from that name that shall not be named, what is on your radar for the rest of the week, sir?
Oh, man, Cisco Kid was not a friend of mine a few years back. For anyone that's interested in that, listen to the old shows, you can hear me hitting myself in the head on our actual show. So I was really hitting the desk, just kidding. But anyway, just watching earnings, like you said, and want to see what we can do at this 270 mark with SPY and the 2700 mark with SPX. I think we're at some key numbers, and curious to see what we move and if we move, and what we move and if we move to.
You sound like a Dr. Seuss of trading, so that might be a fun book, actually. The stock went up, the stock went down. The stock was a clown. That's my Dr. Seuss impression.
I like that.
Not bad. See, I got a little bit of I got some skin. I got some skills in the Dr. Seuss range. Mr. Bison Ball, what's on your radar, sir?
Yeah, I'm watching that 50-day moving average, which in SPY, which is, or the 200, which is right around 274. We're not that far away. We were right there. Be interested to see how things roll, and I think that's going to be something interesting to me.
And what's interesting to me, listeners, is all the fun stuff that's cooking out here. There we go. Let's turn that music down a little bit so I can hear myself think. Still playing all the fun new controls over here. Listen, we can do all sorts of cool stuff. We're just scratching the surface of all the fun things that we can do. Unfortunately, that's all the time we have to scratch the surface. I was going to make a joke, but I won't, about Mr. Meatball's things. Instead, let's just go. Let's just go around. Let's just go. Let's just end this show before it gets any worse. Let's just go around the horn, see what everybody's got cooking. Let's start with you, Mr. Bison Balls. What is cooking?
Well, you know what I got cooking, don't you? We already had that discussion.
We do.
Yeah, we finally launched our masterclass. We've developed a class for traders, for investors, money managers, and RIAs that are interested in effectively developing skills to basically be a poor man's Mike Tosaw. So if you listen to Mike go, boy, that guy's smart. I wish I could do that stuff for my clients, and you're an RIA or a money manager, rather than let Mike just steal all your clients with his brilliance, maybe you could learn how to be like Mike. And that's what we're doing at OptionPit. Go to optionpit.com/masterRIA to develop investing skills using options.
But you keep saying it wrong, sir. It's the masterclass.
Yes, indeed.
Check out the masterclass from the Bison Ball and the Rock Lobster and all sorts of other weirdly named people that they have over there. Check it out for yourselves. Maybe they got some other weirdos lurking over there you don't know about. It's always fun to find out when you take the masterclass. Mr. Uncle Mike, do you have any bit of mastery cooking up your sleeve, sir?
If you look at your portfolio and you frown just because it is down and you would like to be a little wiser, then look into hiring me as your advisor. Go to www.stcharleswealth.com for more information, and that is my best Dr. Seuss on 2 minutes of notice.
That's great. And for those of you that don't know, Mike does some work for me, and I'm very pleased with the results.
Yes,
that is an unpaid endorsement.
He puts all of his reports out in rhyming form, so it makes it fun.
He
you
does.
Can share it with your kids.
Well, it's perfect because he manages my kids' accounts.
Yeah, exactly. So make your kids interested. And if you want to get your kids interested in investing through quality rhyming, Uncle Mike is the place to go. To stcharleswealth.com. Head on over there, click on the Fox. Maybe click on the Fox, you get some Fox and socks, all sorts of other fun rhymes. You never know till you go. stcharleswealth.com. And on behalf of Mr. Bison Ball and Mr. Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, all the other fun stuff that you do. Keep it coming. And we'll see you next time for more of the Option Block. And actually, we'll see you a little bit later today if you're into the crypto for a little bit of the old crypto rundown.
The Options Insider Radio Network is sponsored by
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.